first I want to ask you, in the last couple of days, you did see for a moment there Bitcoin fall below that $50,000 level. I do understand that MicroStrategy acquired an additional 169 Bitcoin for just over $11 million in July. But when you see that dip below 50,000, do you dive right in, and to what degree?
You know, we're always buying Bitcoin quarter by quarter by quarter. It's a long-term strategy. But the most important point for people to understand is that Bitcoin volatility is a feature. It's not a bug. The volatility creates tens of billions of dollars of credit and liquidity at all times, everywhere, to everyone in the world in the short term. But over the long term, that volatility is driving superior asset performance and durability. So it's volatile because it's functional. The other markets are all closed, and they're crippled by the physics and the politics of the asset.
Isn't it a problem when a store of value, if someone wants to use Bitcoin as a store of value, can lose 10 or 20% over a couple of trading sessions?
The reason it moves is because it's functional. It's digital capital, and it's superior to physical capital or financial capital. Bitcoin's a capital investment you can hold for decades that a corporation, competitor, counterparty, or a country can't take away from you. So it'll create generational wealth for your family, your corporation, or your country. You can liquidate it at any amount, anytime, anywhere in the world, or you can hold it for any amount of time without active management or business acumen. So yeah, it's volatile, but it's so superior to every other option that you have for long-term capital management that I actually think the world is just waking up to discover this virtue.
Michael, I still feel the need to really understand the psychology of these pullbacks, because at some point it still matters the price you buy into Bitcoin at. How much are you willing to put to work when you see those dips? What types of dips do you look for when you put more money to work in it?
You know, we look at Bitcoin as cyber Manhattan, so there's never a bad time to buy up scarce, desirable real estate in the greatest city in North America. There's never a bad time to buy Bitcoin. So we will just generally acquire it, you know, whenever we have cash, whenever we can raise money in the capital markets, whenever we see the opportunity. I think timing the market is almost impossible for the mere mortal. It's time in the market that matters.